the noise to signal ratio around the Brexit story has meant that a lot of people, very understandably, just haven't really focused. I suggest now is the time to focus. The Prime Minister's Brexit withdrawal agreement got an absolute pasting in Parliament. A historic defeat. I don't think it can be amended. Her political capital is much reduced. However, paradoxically, perhaps, I do believe that she will survive this no confidence vote. But the options from there are really closing off. You see the pound rallying today. Why? After this scale of defeat maybe seems a bit counterintuitive, because the way investors are assessing the situation is that these developments are making Brexit less likely.
That's what I'm and now I'm easily confused, especially at this hour, Tina, but that's what's so confusing. We've had guests on the last couple of days who have said, well, it's the margin of the loss is what matters. If it's a narrow loss, then it doesn't matter that much. If it's a big loss, it matters a lot. It was a monstrously large loss, the biggest loss by a UK Prime Minister in modern history, and yet the market seems to be reacting with a shrug. That's what I don't understand. Help us understand.
Well, it's important to understand that the tail risks have gone up, and a month ago, this is what my take on the situation was, that the tail risks being either a chaotic crashing out, no-deal Brexit, because remember that if the UK does nothing, it leaves the European Union on March 29th. And the other side of it being a second referendum or other outcomes that increase the probability of what I call never Brexit. Now, markets have not really started to price in the chaotic Brexit scenario. There's still a hope against hope that the responsible adults running the country won't allow that situation to happen. But what we're probably seeing is that sterling and some of the UK names that are most associated with UK PLC probably have been hit a little bit too hard, perhaps, by the UK risk premium. And anything now that happens that makes it look like Brexit might be delayed or postponed or just not happen at all is going to be well received. And so with that in mind, in the miasma of possible outcomes and the kind of spaghetti of decision trees, markets should look for an extension of Article 50, because that will be the next policy option that would be perceived as good news, in my view.